Welcome to the channel traders. It's your boy GoatFX. Hope you guys are all having a very good time. Just a quick one here. In this video today, I'll be breaking down how I went from guessing trades to confidently understanding smart money concept and price action on Deriv synthetic indices. And if you're struggling to make sense of trading, this video is for you. Trust me, this video is what you've been waiting for. So in today's lesson, I will be teaching you how you understand market structure and trend direction, and how to spot real break of structures and change of character, how to draw sniper level order blocks, and how to avoid fake out and understand liquidity. In this video, I'm not going to be giving you a theory. I'm only giving you what exactly helped me stop blowing account and helped me step up my trading level. And guys, so now before we dive in, I would want you to do me a favor. Grab a pen and a paper, and this isn't a video you just watch and forget. Eliminate every distraction around you, turn off your phone notification, close other tabs, and pay full attention to this video, because what you're about to learn could be the breakthrough you've been waiting for. So come with me to the chat as I put you through what you should learn. So guys, I'll be very fast with this trading, so I just want you to pay full attention to everything I'm going to tell you guys. Trust me, it's worth it. So let's start with the basic, the foundation, which is market structure. Guys, let's start with market structure. Let's start with market structure as number one. So market structure is the most important concept. Do you understand, guys? Every market moves in trends. Do you understand? We have uptrend, we have downtrend, and we have consolidation. But I'll be talking about the two common trends, which is the bullish trend and the bearish trend. And when we are in a bullish trend, we are buying, and when we are in a bearish trend, we are selling. So get the concept, guys. So now in an uptrend, if price is forming higher highs and higher lows, that's an uptrend. For example, you can see here, you can see we are having higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This is typically an example of a basic uptrend structure. Do you understand, guys? And vice versa, if the price is forming lower highs and lower lows, that is a downtrend. Do you understand? This is it here. Lower highs, lower lows, lower highs, lower lows, lower highs. This is typically a downtrend structure, a bearish structure, guys. So simple, right? But here's where most traders get it all wrong. They try to trade against structure, or don't even know what trend the market is in. So before you enter a trade, you should ask yourself, what's the current structure saying? Is price respecting the last highs or lows? Do you understand? This is what you should ask yourself. So now with this concept, it tells me if I should be looking for buys or sells. Do you understand, guys? So now number two, how to identify break of structures and change of characters. Do you understand? Now let's talk about it. Break of structure and change of character. What is a break of structure? A break of structure means the market is continuing its trend. For example, if we break higher highs, the uptrend continues. Now this is a typical example of a break of structure. Sorry, I didn't map this out. Now something like this. This is a break of structure. BOS. This is a break of structure, guys. Now when price keeps respecting the lows to the upside, giving us a break of structure, it's tells us that the trend is continuing, the buyers are still holding the trend. So this is when a high is being broken in an uptrend, it tells us that the trend is bullish, and breaking of a high gives us what? A break of structure. Do you understand? This is typically a break of structure. So every break of highs on a bullish trend is what? A break of structure. So you can see this is also a break of structure. This is also a break of structure. BOS. So now a break of structure typically means when the market continue in its trend. So now if we are in a higher trend, we expect every higher highs to be broken and every higher lows to be respected. Is that clear, guys? So now let's move over to change of character, which is ChoCh. That is the smart money language. Do you understand? Now this happens when price breaks the opposite side of the trend. Do you understand? Signifying a reversal. Do you understand now? So now you can see here on the chart, we are having what? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This was the last higher highs. Then what happened? Price broke what? The opposite side. You can see we had a break of these lows. And now remember I said on an uptrend, every higher lows tends to be respected. Do you understand? So when a change of character occurs, the higher low is tend not to be respected. Do you understand? So now you can see we had a change of character here, meaning what? The uptrend is coming to an end and we should be expecting a new phase, which is the selling phase. Do you understand, guys? Do you understand, guys? So this is an example of an uptrend, and this is example of a downtrend, which is I marked out bullish to bearish and bearish to bullish. Here you can see we are having lower highs, lower lows, lower highs, lower lows. We broke structure to the downside. So on a downtrend, every lower high is tend to be respected. Do you understand? So now look at what happened here. After this lower low, we had a lower high and we had a new lower low. And what happened? The lower high was disrespected, giving us what? A change of character to the upside, telling us that okay, there is a reversal. The reversal has started from bearish to bullish. Do you understand, guys? So now these two tools, which is the break of structure and the change of character, helps me to stay alignment with the smart money and avoiding guessing the market, guys. Do you understand? So number 3, we are moving up to how to draw and refine order blocks for better entries. So this is just a typical example of a bullish order block. Now let's go deeper here. You've probably heard about order block, I know, but let me simplify it to your understanding. An order block is the last bullish or bearish candle before a strong move in the opposite direction. Do you understand? It is where the bank and the institution, which are the smart money, place their order. Do you understand? And here's how to find them. Look for a big push to the upside or to the downside. Identify the last candle before that move, be it bearish or bullish. Do you understand? Mark the body and refine using price action based on what you're trying to do, based on maybe you're placing a real trade, or you're backtesting. Do you understand? And this is a typical example. You can see here, you can see we have a bearish, and what happened? This is a big move, right? This is a big move, and where is the last candle before this big move? This bearish candle. So that is my order block. This is my order block. So what am I to do? I mark out from the highs to the low of that candle. You understand, guys? I mark out from the lows to the highs of that candle. This is my order block. And now marking out the bearish order block, you can see the last bullish candle before the big move to the downside, which is the green candle before the impulse. This is my bearish order block. So this is how to mark example. So let me just take you down to a real chart and show you a sample. Now on a real chart, you can see over here, on a real chart, this is just an example. You can see on this market structure here, on this chart here, you can see we are having lows, highs, low, signifying what? A downtrend. You can see lows, 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 and lows and lows. Then what happened here? We change structure. The like I said earlier, when we are about to change structure, or when we change structure, the lower highs is to be disrespected on a bearish trend, while vice versa, the bullish trend, the higher lows is to be disrespected. Do you understand? So now this is a bearish trend. Now see what happened. Price disrespected what? The lower high, and we change character. Now what did you see? You can see we've changed the trend. We are now having what? Higher highs, higher lows, higher highs. Do you understand, guys? So market structure is very easy to read if you understand what the concept, if you understand what it really takes. Do you understand, guys? So market structure is very easy to read. So now marking out an order block. This is an order block. You can see this is an order block, the last bearish candle before the bullish move. We can see we have a very impulse move down here. This is an order block. Let me see if I can map out order blocks so that you understand what I really mean. So you can see this is a bearish order block over here. You can see price is reacting from it. This is a bearish order block. You can see I marked out the last candle. Be it can be bullish or bearish, but the last candle before the impulse move. Do you understand, guys? So this is my order block. Let me see if I can get, okay, we have another one over here. You can see this is our order block. This is another block. So the last candle before the push is another block, guys. So that's just it for now, guys. If this video gave you clarity, just imagine what we can do together. I'll be teaching this concept in more depth with live examples, guys. Trust me, and even my trade breakdown. So do me a favor by hitting the subscribe button, turn on the notification bell, and drop a comment if you're ready to become a smart trader, not a guessing one. So let's go together, grow together, guys. It's your boy GOAT FX, and stay blessed. God bless you.